Namaskar and good morning. Today we will take a look at Yes Bank with reference to its Q2 FY24 results. First is interest on bills and discount on interest on advances and discount on bills. Q2 5,122 crores. Q1 4,971 crores. So quarter on quarter there is a growth of 3.04%. And Q2 of last year 4,313 crores. So with reference to Q2 of FY24, that is 5,122, there is a year on year growth of 18.75%. Then comes the income on investments, 1,143 crores in Q2 FY24. Then 1,165 crores in Q1. So there is a degrowth of about 2% quarter on quarter. Then in Q2 of last year, 847 crores. So with reference to that, Q2 FY24 shows a growth of 35.02%. There is other income of 1,267 crores, which has grown by 29.74% year on year and 6% quarter on quarter. Interest expended 4,794 crores in Q2. In Q1, 4,449 crores. That means there is the interest expended has grown by 7.74%. And in Q2 of last year, 3,487 crores, which shows a growth of 37.45%. So operating profit comes to about 810 crores. The Q1 was slightly higher at 823 crores. That means there is a degrowth in Q2 of minus 1.54%. Then Q2 of last year, 3,487 crores. So with reference to that, Q2 of this year has grown by 37.45%. Sorry. Operating profit has grown by 1.49%. 798 is in Q2 of last year. 710 is current year Q2. 810 is Q2 of current year. 823 is current year Q1. So 1.49% growth in operating profit year on year and degrowth of minus 1.54%. Provisions 506 crores in Q2, 360 crores in Q1 and 583 crores in Q2 of last year. So there is a degrowth of minus 13.3% year on year. But there is a growth of 40.31% quarter on quarter. Provisions have grown with reference to Q1 but has come down with reference to Q2 of last year. Net profit is at 229 crores, but previous quarter Q1 is 347 crores and Q2 of last year 160 crores. So there is a growth of 42.53% with reference to Q2 of last year, but the degrowth of minus 34.48% with reference to Q2 of last year. Quarterly growth. So with reference to Q1, there is a degrowth of 34%. And with reference to Q2 of last year, 42.53% growth. EPS follows suit. my very dismal EPS 0.08 rupees. Last year it was 0.06, previous quarter 0.12. Then percentage of gross NPA is at 2%. Previous quarter also 2%, but year ago quarter was 12.89%. So with year on year there is a degrowth of minus 84.5%. Percentage of net NPA 0.9%. Previous quarter 1%, and 3.6% was the figure for Q2 of last year. So it has come down by minus 75% year on year and minus 10% quarter on quarter. Net NPA has come down, that is a good feature. Return on assets is dismal 0.3. Current market price is around 17.30. 52-week range is between 1440 and 24.75. Volumes are good. Buying and selling, there is no problem. So profit has grown with reference to the last year. But it has come down with reference to the previous quarter. Revenue has been growing in the past 4 quarters. Book value per share is improving in the last 2 quarters. FIIs are increasing their shareholding, but high interest payments compared to earnings. Interest expended is very high compared to interest earned. Therefore, profit growth is very low. So, high debt, company with high debt. Mutual funds have decreased their holding. Cash generation has become poor, it is not improving for in the last 2 years. Net cash flow and cash from operating activity for last 2 years declining. Piotrowski score is low, that means weak financials. Declining net cash flow, major fall in trailing 12 months net profit. Yet, some of the brokers have given higher recommendation. NPA has come down slightly, not much. So, technicals neutral. It is a weak stock. EPS is very low, 0.27. It has actually come down. Price earning 64.07, very high price earning, even at 17 rupees, price is low. But even at that price higher price earning, 64. Price to book 1.29, that is okay. Market cap is very low, 49,752. Book value is 13.45, very, very low for a bank. It is an underperformer. Analysts, most of the analysts say that it is a underperformer. Mutual funds have decreased their holdings and the FIIs have decreased their holdings. Now, price performance, if you see during the last 3 years, there has not been much growth. So, it was never a multi-bagger, but I remember 4 to 5 years back, maybe 5 years back, it was a very good popular share. Maybe 300 plus it was quoting. I had some holding and I disposed of before it was late. So, what does the Yes Bank CEO Prashant Kumar say? He says, net interest margins may improve by 20 basis points. 20 basis points is not much at all. So, Yes Bank should aggressively try to attain the old status by carefully managing the interest receipts and interest payments and NPS. So, the Chief Executive Officer and Managing Director Prashant Kumar has said that the NIMS will improve by 20 basis points. So he says what we believe to be the end of the margin compression, and going forward margin expansion is expected. We expect our NIMs will expand by 20 basis points. So at the moment, Yes Bank is still in lot of trouble. The management has to improve the interest earnings and control the interest payments and improve the net interest income and net interest margins. It has to control the provisions, it has to control the NPAs. All aspects have to be controlled. So I don't know when it will happen, but Yes Bank may come out of its problems within a few years. Thank you for listening. I will be back with you with a very good company.